Welcome, dear traders, as the financial markets absorbed the surprisingly dovish comments on the interest rates from the head of the Federal Reserve. Recent actions by various European regulators have added new layers to the economic narrative. Speculation that the Bank of Japan may revise its policy approach, particularly in the light of the unfolding political crisis in Japan, adds to the ongoing market anxiety. And today, the People's Bank of China carried out its largest ever injection of yuan to support liquidity, signaling its proactive statement the management of economic stability. Today, the Chinese regulator extended 1.45 trillion yuan one-year credit line to the banking system and left the interest rate unchanged. In a total, this amounted to new injections of 800 billion yuan into the country's market to boost confidence and demand in the country. In addition, the People's Bank of China also injected 50 billion yuan on the condition of a 7-day repurchase operation to increase domestic demand and support the economy. Moreover, this is not the first time that the country's authorities have taken such steps. It seems that the efforts are beginning to bear fruit, and today's reports showed that retail sales continued to rise in November, up 10.1% year-over-year, the highest reading since May 2023. This was much faster than a 7.6% increase in the previous months and compared with the market consensus of 12.5%. China's industrial production advanced in November, accelerating to 6.6%. It was the fastest pace of growth in industrial production since February 2022. Overall, industrial output grew by 4.3% for the 11 months of 2023. The substantial injection of a fiat yuan into the market did not significantly bolster the US dollar strength during the Asian trading session. The dollar's value, measured against a basket of its six major counterparts, showed only modest growth, hovering near 102 points. On Thursday morning, the US currency was trading higher within a narrow range between 101.80 and 102.10. Technically, the US dollar index maintains a bearish trend. Consequently, its trajectory might continue towards the support level of 101.40. The nearest resistance is around 102.60, and the primary catalyst for the dollar's current weakness in Europe. Yesterday's concurrent announcements from the major regulators, the Eurozone, the UK, Switzerland, and Norway, stated their intention to maintain the prime interest rates at a record high levels for the foreseeable future, and this stance placed the US dollar at a disadvantage against the currencies of these regions, particularly in light of the Federal Reserve's dovish outlook. In the early hours of a Friday morning, the dollar-yen pair was predominantly driven by bulls, briefly touching the 142.40 mark. Consequently, the pair found itself at a crossroads with a nearly equal prospects of either advancing towards the resistance level at 142.5 or retesting towards the support level of 141.5. On the one side, the anticipation that the Bank of Japan might abandon its negative interest rates policy by December 19th, the largest diminished. Conversely, Japan's political landscape is currently marked by a financial scandal involving the country's ruling party. This scandal has led to the ousting the several ministers, causing a significant destabilization with the government. Moreover, the yen continues to find support from the potential of a long-term shift in the Bank of Japan's monetary policy. Meanwhile, the possibility of a weakening US dollar also remains a relevant factor, especially considering the pair's sharp decline from the 146 level on December 13th. Amidst these divergent factors influencing Asian trading, the yen's volatility has intensified, resulting in an expanded price range between the support at 141.5 and resistance at 142.5, Such pronounced fluctuations in the forex market tend to provoke anxiety among Japan's finance policymakers. And today, Japan's finance minister reiterated that the authorities were firmly watching currency market moves. It's important that exchange rates move stably, reflecting fundamentals, Shunichi Suzuki said, repeating a familiar statement. The trading sessions on December 13th and 14th marked the beginning of a notable upward trend for the Australian dollar, propelling it to its highest levels in 5 months. Since that surge, the pace of the Aussie's appreciation has moderated. Over the last 24 hours, the Aussie dollar pair has been hovering within a narrow range between 0.6690 and 0.6730. Encouraging economic data from China has been a key driver, bolstering bullish sentiment in the PAM. And this positive momentum could potentially push the Aussie towards the resistance level of 0.6810. Conversely, should the US dollar gain strength, the pair may test the support levels at 0.6670 and 0.6610. The antibody currencies known for their sensitivity to fluctuations in oil prices and have strengthened today beyond by rising Brent and WTI crude. In addition, the New Zealand dollar appreciated positive news from China, trading higher within a daily range of 0.6190 and 0.6220. Moreover, the bullish trend remains intact, suggesting potential further appreciation of the New Zealand dollar from its current level of 0.6222. It could aim for the resistance levels of 0.6266 or possibly even 0.6300. Notably, the US is set to release another set of crucial economic data today, and this upcoming release could significantly alter the landscape for the US dollar and its currency pairs, potentially impacting their current trajectories. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you online next time.